The thing about estate tax law is it changes all the time. We just recently ended up in a situation in which we're, about a $30 million exemption for married couples. But within the past 20 years, that's been as low as $1 million. And that really changes how we plan for folks. The big thing that ends up happening is your heirs are left with what you set up. They don't have the opportunity to change or help plan. And so what can happen is you can end up with, a lot of resentment. Something that you built that you thought was good can lead to resentment in how it's left to your kids or your nieces, your nephews, or whoever.
Hey there, it's Mike Langford. Welcome to another episode of the 6x6 Lock Podcast, a secure money movement podcast for the private markets. On this episode of the show, Todd, Sorrel, and I are joined by Mark Prewitt, CPA and founder and managing member at Cohesion, a planning first accounting, tax advisory, and fractional CFO firm serving high net worth individuals and privately held companies. This is a fantastic conversation for anyone in the private markets who wants to make sure they're keeping more of what they've worked so hard to build. You're absolutely going to love this conversation. Now, before we get into it with Mark, please do make sure you subscribe to the 6x6 Lock Podcast on Apple Podcasts, Spotify, Amazon, the YouTubes, or wherever you like to get your podcast jam on. And if you have a question or a suggestion for a topic or a guest for the show, hit us up. Just shoot us an email, podcast@6lock.com. Okay, let's get to the conversation with Mark Prewitt. Well, Mark Prewitt, Todd Sorrel, it's wonderful to see you guys. Welcome to the 6x6 Lock Podcast.
Thanks for having us.
Good to be here, as always.
Show. Yeah, exactly.
I know.
This is awesome, man. Well, happy Friday. We are recording this on a Friday, and we're like all in a fabulous mood. Before we click the record button here, we were talking about not the elephant in the room, the moose in the room behind Mark. It's really hard to ignore. So before we even get into the topics of the day, let's hear the story of this moose, just so the viewers, and if you're listening, by the way, you're going to want to come over to YouTube or Spotify video and watch this thing to see the size of this moose. It's really impressive.
No doubt. That's pretty massive in that office of yours, buddy. You got
to
tell us how Bullwinkle showed up there.
There's a couple reasons he's here right now. One, he doesn't fit in the house, which is natural.
Is that the real reason, or is it Mama said, "Hey, get that out of here"?
That's the easier reason, but the real reason is occasionally we have to get on uncomfortable phone calls, and when anybody sees this in the background, they can't really be that mad that long. They just look so right. So it's a little bit of, some comedic relief at times, but no, I'm an outdoorsman. I love to be outside, and, my office just kind of has this stuff in there to kind of keep me rooted in some of the things that I enjoy and love, and keeps me happy. But yeah, this moose back here is a product of COVID when everybody was locked up. In September, Alaska was accepting visitors still. So we flew up to Alaska, spent 10, 12 days in the swamp, and ended up with biting off probably a little more than we could chew. But it was a good time.
How'd you get into the swamp? I mean, you just don't pull up to a swamp and hop in it. I mean, it's planes, trains, and float planes and automobiles there, right?
That's it, float planes. They drop you off on a lake, and you've got your stuff, and off you go. And, you check in with, those Garmin inReaches, those little satellite messaging things. And
what time of year?
Hey, it was September.
Okay.
Lots of bugs.
Yeah.
Very cold.
Yeah, nights got cold.
Cold at night, warm in the day. But
yeah,
grizzly bears coming out of hibernation, all fun stuff.
Yeah, right on, man. What were you hunting for? Was it kind of just anything? You have tags, or was it, we're on a mission, fishing poles too?
Moose was the mission, so mission accomplished. But you always have ancillary stuff, and you hope you don't end up having to do anything in self-defense. But you've got brown bear and black bear and all kinds of stuff, fish. So it's cool. You get to kind of nestle with the base of a glacier. So very cool to kind of wake up to that every morning. But lots of fun.
That's awesome.
Yeah, that sounds like an adventure. Was there one thing that you missed not having with you being dropped off in the middle of nowhere? Were you did you Boy Scout it pretty well? Like you were all prepared? And I mean,
What
obviously you needed a hat.
Well, I had hair at that time.
Actually, both of you guys. Actually, I have some guilt here, guys.
Yeah.
I got the head of hair.
Hey,
I'm sitting
listen,
with
man,
you
we're
guys.
aerodynamic. Nothing's slowing us down. Nothing but face. And, why would you want to mess up the moneymaker with hair?
Two handsome devils. I know. That's right.
You miss the most the second pair of underwear, That's where it gets kind of not so fun for you and your campmate.
Right. Right on. That's pretty funny.
How did you get this moose home? So for the listeners and viewers, Jean-Marc is in Texas as well. How did this moose get home? Does it come by truck, flight? What's the process for getting a moose from Alaska to Texas after you've bagged it? Yeah,
it's interesting. Their way of life is so different than ours. They're used to this. This is commonplace. So you show up to UPS or DHL or wherever it is up there with a bunch of moose meat and a moose hide and moose horns. No big deal. Here's what we do. And so, it all kind of came separately. The hide and the horns went to the taxidermist. And then about 2 weeks later, 15 boxes of meat showed up at DFW airport. And so this is also again, in the middle of COVID. And so if you remember, deep freezers were not in very high supply at the time, and I ended up having to procure 2 deep freezers for what was a lot of money for a deep freezer. In order to store all that meat, and it took us about 3 or 4 years to get through it all. But
you share it with neighbors. I mean, did you have a big
share with everybody who would accept?
Yeah. I mean, there's crawfish boils and there's, cooking fajitas. What do you call like a moose gathering? Like you're a bunch of moose steaks on the grill. Is that a moosery?
Barbecue. Oh, it is.
That sounds fun, man.
That's awesome.
It's good meat, isn't it? It's delicious, I've heard.
It is great.
Yeah.
This is awesome. Now I'm getting hungry. So I think I've told Todd before, and now you're going to know, Jean-Marc, I'm a food lemming. So like when I hear about a certain type of food or something like that, like I'm going to be craving the food. Now I've not had moose, but I've had venison and elk and so forth. But so now, well, put it this way, some form of meat is going to be happening this weekend because I just,
there you go.
Once it's in my head, I can't stop thinking about it.
Love it.
Weekend, perfect time to cook up like.
There you go. Awesome stuff. All right. Well, let's get to the meat of this episode and start talking about some really interesting stuff. You see what I did there. So we're excited to have you on the show for not only to talk about moose and how handsome us bald men are, but also to dive into kind of the stuff that you're doing with Cohesion and how people in our audience really can learn from it. I'm sure everybody has a CPA and has worked with an accounting firm at some point in time. And usually when you ask them what they do, they're kind of like, oh yeah, well, we, tax stuff and your bookkeeping stuff. We can handle a lot of the different stuff. But like when we started talking to you about Cohesion, you use a phrase planning first as how you lead with it. And I love that because, as we were talking about in prep, the high-end firms that I've met with first and talked to in your space always talk about, listen, planning is where it's at, tax planning and preparing for a whole bunch of stuff. So why don't you give us a little bit of a background on Cohesion and what the firm does and who you serve and what the philosophy of the firm is?
Yeah. Cohesion, really was founded as a tax-only practice and it's kind of evolved into what it is. We've kind of got 3 main service lines, one being tax, the other being outsourced accounting and finance, and then we've got a wealth management arm. In all 3, really, we try to focus on that planning aspect first, and that's our differentiating factor. That's what, many people aren't currently getting and what they're seeking. It's also something that's just not super common out there to be executed on. And generally, it's because people grow up in the public accounting world, and it's done how it's done, and it's compliance focused. It's billable hour focused. And, if you want to attract clients in a market that is saturated with a bunch of the same thing, you got to do things differently and really figure out what clients want and what they value. And so that's how we came to take the approach that we've taken as opposed to just doing the same thing that's done elsewhere.
So when we talk about planning first, right? So I think everybody has probably their idea what that means, but like, you know, how's that work? Like if you're onboarding a new client, what's that process like when they're first coming in the door? And you're like, hey, let's talk about planning first. I know you're all hot to trot for us to start, you know, working on your books and all that type of stuff, but like, let's talk about that planning process.
Yeah, but that kind of evolved, right? I mean, planning came with something kind of somewhat of an evolution of Cohesion. And public service announcement. I am a customer. Love you guys. You guys are awesome. You've kept us out of trouble for sure over the years, and your advice has been amazing. So, I mean, watching Cohesion grow and really expand into all kind of different offerings, I would say like the planning piece has really kind of risen to the front of the conversation and risen to the front of offerings, I would say, is Cohesion. And I'm not just trying to like plug you guys, but I'm just saying I've watched this, seen this happen because we came to you originally for some tax, you know, questions, you know, and we'll get to this later about QSBS and Section 1202, these kind of things, really top of mind for us at the time, but it led to a plan. Like the plan was the thing. It was really kind of, when you step back and look, kind of one of the things that we needed. So anyway, I'll let you answer the question, but this is kind of where I came from. And I saw planning kind of really take a front seat.
Yeah. And that's the thing is, you know, we were kind of doing, you know, we were giving more advice than others, and we formalized that into a planning calendar, which is really a twice a year planning calendar, but also available at any time a client needs it. There's a couple of things when we consider planning. It's just a word unless it's executed and understood, right? I think the first thing in understanding what allows for planning to happen is you have to have a good understanding of where you are at any given time. And so there's a lot of responsibility on the client side and on our side to make sure that data is accurate and up to date at all times. Because if you don't understand where you stand, you don't know what you need to do about it. Okay, so that's kind of the first aspect of planning and ensuring that that base is in place. And then when you understand where you are and where things are headed, then you have to make some decisions as it relates to, am I okay with where we're heading, or do I want to change where we're heading? And if you want to change where you're heading, then you go down a couple of different roads, and that looks like, okay, are we, you know, you can always optimize for tax. And I tell a lot of people, we could probably get you to zero tax. It just may not be the best thing for you. And so you've got to make a decision. What is the trade-off between a zero tax environment and a really good, solid, holistic financial plan? And so those decisions really balance each other out. And we can kind of get a little bit of both sides of it when we plan correctly and kind of agree where things land. And that's not something that can just be said, here's what we do. It's specific to every client's needs and what they want and what the family wants and needs. So,
and contextually, you're referring really to like family wealth, like maybe it'd be a nest egg or a 401k rollover or a sold a business, whatever it may be. You're talking about how does that wealth fit into what I need to do, what I can do, in regards to, like, you know, all the IRS rules, and God, there's got to be a billion of those.
Yeah, I mean, I think the first thing we always balance when making that assessment is liquidity needs, because that's the first thing that comes into play is like,
right.
If you want to get rid of the money you just earned, you can probably do so and, you know, not avoid taxes. That's a bad word, right? But you can tax plan around paying taxes and defer those taxes down the road. But liquidity is pretty key in order for us to all keep going and live our lives and run our businesses. So, like I said, it's a trade-off between, you know, understanding what feels good and what's best in the long term. It's an understanding between, you know, using your cash versus using leverage to get tax deductions. And then, you know, your structure also dictates kind of how some of that stuff impacts you in all those decision points.
One of the things you mentioned in our prior conversation around this, you know, concept of, you know, tax planning, as we're just discussing, is there's a bit of a wake up call a little bit that sometimes happens because everybody comes in and they're thinking about, you know, their quarterly filings and they're thinking about income tax. As you mentioned, some clients want to get down to zero tax and so forth. They just have a revulsion to taxes for whatever reason. But the one thing they don't often think about as much, and it might be the bigger, more scarier tax, is estate tax. And you said, so I'm paraphrasing here, but, you know, some people might feel like it's not their problem, but it is your responsibility. And I think for many of the members of the audience, the GPs and the LPs at these large firms, at some point in time, their wealth, right, that they've accumulated over time is going to transfer, right, due to their no longer being here. So how do you approach this topic with clients and say, hey, listen, this is something that needs to be taken seriously because it's inevitable?
Yeah, and to your point, I did make that comment about it not being their problem, and it's truly not. And in some instances, people choose really to not consider or plan around it because of what they see as the cost of executing on it. I would argue that down the road, the cost for those people that you love and that you care about is much greater if you don't execute on what you need to execute on for what you've built. The thing about estate tax law is it changes all the time. We just recently ended up in a situation in which we're, about a $30 million exemption for married couples. But within the past 20 years, that's been as low as $1 million. And that really changes how we plan for folks. The big thing that ends up happening is your heirs are left with what you set up. They don't have the opportunity to change or help plan. And so what can happen is you can end up with, a lot of resentment. Something that you built that you thought was good can lead to resentment in how it's left to your kids or your nieces, your nephews, or whoever. And so understanding, really those human implications, and then also diving into what the dollars issues are equally important in our minds. It's much easier to quantify the dollar issues and how to kind of plug for some of those problems and structure around some of those problems. What's harder to quantify and is that emotional impact that not taking approach to estate planning has on people.
Yeah. How do you manage that? How do you manage like kind of, I think a lot of the emotions around something like that? I mean, that's a big deal, right? I mean, you talk about wealth transfer, talk about like the next generation. I'm not here, the next generation, and then maybe the third. Yeah, you got to be threading a needle there. How do you do it?
You listen a lot and you try to understand people. And, I think the worst thing you can do in a situation where maybe what you think is not the same as what somebody else thinks is try to push your narrative onto them. And so I think it just comes down to education, saying, look, I'm not saying that you have to make this decision. However, I'm going to tell you in my experience, here's how I've seen this decision play out for others. Yeah. And generally what I see is people's attitudes around estate planning change over time. I'm not going to mention names, but Todd, you know someone very well whose attitude towards his family's estate planning has changed drastically in the past 3 to 5 years. And it's actually been a lot of fun to kind of watch that come around and just to kind of be able to work with that individual and that family on what some of those issues are. But I think it's a listen and a sharing of experience. I think, a lot of the listen and share are going to be entrepreneurs and high net worth individuals. And generally those people didn't get in the position that they're in by not beating to the tune of their own drum.
Sure.
Those people are creators of wealth, builders of wealth for ideas that they came up with. And so, they're generally not going to be the most receptive to having their mind changed immediately.
Yeah, no doubt.
Education, right? And
yeah. If you think about that profile, like if you're Cohesion's profile customer are these business owners, operators, entrepreneurs, inventors, they inherently, that profile right there takes a lot of risk, and I would just think, and I would love to get your take on this, is do they have that kind of risk profile when it comes to like pushing the envelope with some of the, IRS codes that are out there that they can really leverage or take advantage of? If there's some for them, do you find that profile extends into that? Like saying, yeah, hey, John Mark, let's do that. Let's push the envelope on this, or let's find an opinion on that. Like, is there a crossover there? Am I thinking about that right? I mean, is that how a lot of them do it?
I would say generally, they're going to be more risk tolerant than okay. Now, with that being said, I think you also see as people go through their entrepreneurial careers that profile changes a lot. Not for everybody, but for a lot of people, you'll see that profile change over time. when you start the business, lots of tolerance for risk. As it grows and you start to have something, people become a lot more emotionally reactive to the risk of loss than they do the risk of further gain. And so you kind of start to see some of those decisions that would have probably been more aggressive start to lean more conservative. Now, there are some people that are just all gas, no brakes all the time. And those are cool personalities too. They're just different to work with.
Yeah. Yeah, that makes sense. One of the things that stands out to me is kind of a real life example too of some of the things that came about in the last, I would say the last 10 years is the option or the availability of QSBS for small businesses to get started that are really coming up and inventing something, right? And doing something. And we use this here in our last company, QSBS, and we're using it today as well. But it's a great code that it just inspires and really incentivizes entrepreneurs to get out there and work hard and grow things and, bring something really highly valuable to the marketplace. Tell us a little bit about that QSBS. I mean, I think it's so interesting to me when I learned all about that. You brought that to my attention. That was all you. And how that relates to Section 1202. I think the audience would love to hear about kind of what that means today, who it's for, and how it plays out.
Yeah, and that's another planning decision point that we talked about. You kind of got to go down one of two roads. One of the things that's a lot of times really nice when you're growing a business and you're infusing capital in it is you can take those losses to offset personal tax obligations. If you're going to go down the QSBS route, you lose that ability. So what generally people think is, I've got losses, I'm going to shelter myself from tax in other areas. That really goes away when you do say QSBS is going to be a strategy. And the reason for that is you're required to have a C Corp structure. Those C Corp structures are really great from an investment standpoint. A lot of investors really prefer a structure like that. And so from a business that's going to be high scale, high growth, high capital intensive, that can be a great way to raise capital. And then in turn, the 1202 stock follows. And if you're not familiar with what 1202 stock is, it's a small business stock designation that allows for previously before new tax law, whenever y'all did y'all's first deal, Todd, every taxpayer of original issuance 1202 stock was eligible for up to $10 million of exclusion. There's other calculations that go in there, but the easiest one to remember is $10 million of exclusion for a 5-year hold. Under new tax law that passed on July 4th of last year, that 1202 exclusion has gone to $15 million per original issuer of 1202 stock. And what has happened is that they've also built in other provisions that instead of having to hold for a 5-year for an all or nothing, you're allowed to get into some partial exemptions in a 3 and 4 year hold. So there's a lot of new benefit there. There's other new rules too. But when if you're able to walk away $10 or $15 million tax free on the sale, that's significant.
Yeah, right.
There's other angles that you get into when you start looking at this 1202 stock as well that allows for you to gift stock to trusts. And in those scenarios, if constructed correctly under proper legal advice, you're able to actually transfer additional layers of that $10 or $15 million exemption over to those trusts so that you can really expand what you're able to shelter from a tax-free standpoint at 1202. So it's a really incredible planning tool. But again, there's give and take. It's the give and take of giving up those ordinary losses along the way that you may like to have. But if you think you're going to build something that's going to sell for big dollars down the road, man, tax-free feels a whole lot better than having some losses right now.
Yeah, no doubt about it.
You mentioned that some of the QSBS metrics have changed in recent years. And one of the things we talked about in prep was, and Todd, you asked this question, like, how do you help people plan for 5 years or whatever when things seem to be changing all the time? Like what's, because it's like a moving target with all this tax planning. And you gave a grounded answer. You basically said that you plan for the structures that exist today and stay nimble. So talk us through that. Like, how does that work from a practical perspective?
Yeah, I mean, practically, that's all you really can do. Otherwise, you're giving people advice that may put you on notice of the E&O carrier. So that it's one of those things that you're always trying to assess what's coming down the pipeline in Washington or in your state government. But we're traditionally going to plan under what's available now and then set up some scenario analysis of if this were to happen, here are some levers we can now pull that allow for us to change the answer to be this versus this. Mm. And we talked through this. One of those examples was last year that the OBBBA Act, or One Big Beautiful Bill Act, passed on July 4th. And there were a lot of provisions that were retroactive to January 19th, which was Inauguration Day. And so what that meant is that as this stuff was moving through Congress, we were working with clients in our mid-year tax planning sessions saying, hey, here's where we stand right now. Here's where we're projecting to the end of the year. If we do nothing, or if tax law doesn't change, bonus depreciation could be as low as 40%, which is not going to give you as big of a tax break if you're going to go spend money to achieve that bonus depreciation or take on debt to achieve that bonus depreciation. However, there is a high probability that we're going to have 100% bonus depreciation, but will that start as the date of the law passing? Will the law pass? Will it be retroactive? And so, you're trying to make plans based on a lot of uncertainty there. So what we would do is we would plan around what was certain with alternatives, keeping, alternatives in mind should tax law change, as of a certain date or retroactively. And what ended up happening was it was a retroactive change that, again, going back to entrepreneurs being risk takers, you're having those conversations and say, everything out of the news is saying this. That can change with one overnight, session of negotiation. But people started pushing their chips in the middle of the table mid-year and started buying stuff with a hope that it was going to be a retroactive deal, but also might not have been. And so, that's how you plan. You plan with what's available now, what's known now, with the understanding that there's levers in place that legislative changes could change that for good or bad.
Yeah, one thing that comes to mind right now is I get questions a lot about this in the verified money movement business is that, hey, Todd, tell me a little bit about crypto and what does the Genius Act mean, going forward for, using, blockchain rails or using crypto rails of some kind, Bitcoin Lightning or others. And, it's interesting because there's definitely a lot of froth and groundswell around to go out and build around that promise with the Genius Act. But, the one thing I got to keep in mind is will the Genius Act survive to the next administration? And I don't know the answer to that. And it doesn't matter which side of the aisle, but you have to ask the question is, if you're going to make an investment like this and really kind of build around that, and this is an infrastructure play for a business like ours, right? So you really need to be mindful of maybe it won't last, or maybe there's a ton of changes that make it look much different, right? So you got to think about it.
Well, think about renewable energy, right?
Yeah.
And think about, all the energy credits that have come and gone and people placing bets there. And another real world example is the hemp industry and the marijuana industry.
Right.
And how we're trying to make, bets on doing some, really innovative and creative things with those plants that aren't just, smoking it. And how does that affect their business? And does that shut down their business? And that's just risk.
Yeah.
There's risk to our business. If they go to a flat tax, are we needed?
Well, that's a massive headwind, but what about AI in your business? How does AI play into people you're just reading a bunch of codes and trying to figure out what's applicable to me, and I'll throw it into Grok or I'll throw it into ChatGPT and it'll just spit me out an answer and I just saved myself a few bucks. I'm oversimplifying it, obviously, but love to get your take on that. Like, what is the headwind from AI? I mean, obviously, I'm sure you guys are leveraging it too. I don't want to put words in your mouth, but I mean, I think everyone is implementing it to some degree on a spectrum in their business. I'd love to hear your take on that, man. How do y'all answer that?
I mean, we have conversations about it all the time. I think when you consider AI, I read a really interesting article out there the other day, and whether or not it means anything, it made me feel better, and so we're gonna stick with that. You know, you've got OpenAI, you've got Anthropic, and you've got these people with all of this. They have the highest and best usage of, you know, these platforms that are out there that haven't even made their way to us yet. And the article was basically written in that there's been no change to how they do their accounting, how they do their finance. They're not leveraging it there because they haven't been able to find a way to make it successful. Now, I'm not saying that won't change over time. However, we receive a lot of AI written documents from clients all the time that says, well, what about this? What about that? And AI will answer the question you ask it. Most of the time correct. But if you're not asking the right questions, you're definitely not going to get the right answers.
Right.
So I think that, you know, AI is a tool. And as people, we all have tools, and we're all competing against other people with tools. And I think what AI is going to do is it's going to allow the people who are really, really good at what they do to get better. And for the people who maybe are not as good to also get better. But also, like, I think that assuming that AI is going to take over everything in the world is probably just a bad assumption. I think it's a fear-mongering.
Yeah, no, I agree with that. Yeah, I totally agree. I mean, there's that's just doesn't seem feasible. I mean, AI cannot replace judgment. Right. At the end of the day.
That's correct.
Yeah.
That is
But
correct.
what's interesting about the AI thing, and it kind of leads me to like a topic I wanted to surface here, is like, I think it's inevitable that because of AI, the GP of the future, the LP of the future, whatever, is going to be walking in, and they've been doing some form of rolling their own when it comes to all the accounting stuff, right? They this, and by the way, we've talked about it a little bit on the show before, but these are relatively small businesses, even though they're managing billions of dollars in many cases, right? Most of them are not like, you know, multi-thousand employee operations, right? You'd be surprised at how small the operations are for many of these firms. And so, you know, there might be some element of like DIY that they've been doing for a while. When somebody who comes to you who hasn't been working with a firm like yours before, like, what's kind of the first things that like their eyes get big about, like, oh my gosh, like this is I should have been doing this for a long time ago.
You know, there's a lot of really common issues. And when we started talking about this, you know, previously it was, you know, coming up with examples isn't as easy. So I was able to say, what are some like really interesting areas we find a lot? In changing providers, one of the biggest areas that we find is like your net investment income tax, and whether it's from an active business or a non-active business. And a lot of people are paying like a 3.8% surtax on sales of asset sales of businesses that maybe they shouldn't. And when you're talking about $20 million, 3% is a big number, right? And so that's, you know, something that's super common in assessing tax returns. When you look at financial statements, the things that are hidden on the balance sheet that founders just aren't aware of because they don't even know what the balance sheet is.
Exactly.
That can get really scary and open a lot of eyes really quickly. You know, your balance sheet is really your source of truth. You know, really a third common DIY issue that we see is, you know, everybody knows about bonus depreciation. Everybody knows that you can go do all these things and take all these deductions. Well, you know, a super common approach, it used to maybe be more valid, would have been, okay, well, you know, I'm going to have capital gains from the sale of something. I'm just going to go buy a bunch of equipment and offset those capital gains, and I'm going to neutralize my tax impact. Well, several years ago, there was the introduction of what's called Section 461, which limits your business losses in any one year. And so if somebody is trying to do tax planning for a current year capital gain, their business losses can only get up to about $650,000 in married couple. And so if you've bought $10 million in equipment to offset $10 million of capital gain, which are totally different types of income, you just made a pretty big mistake because you're only going to get that down to about 9.4. Mm-hmm. And so really what it takes is just a really comprehensive understanding of tax law and all the moving parts that can limit you or benefit you. And understanding that tax planning is a multi-year game, and that, if you were going to make investments this year to achieve business depreciation and get that 600 max, but you had the extra 9.4 in the same example left, that's going to roll over to next year as a net operating loss. And so really that net operating loss would then be able to offset a bunch of that capital gain in the following year. So your tax planning strategy is really a 2-year out tax planning strategy, not just I'm having a good year, I got to fix this right now. Now, depending on the character of income, you can certainly still fix a lot of that. You've got to really be paying attention on a multi-year approach on the income tax side. But then certainly, like we alluded to earlier, the really far out there planning scenario, which is estate tax.
Yeah.
This is kind of a silly question, but how does one go about deciding to start a firm like Cohesion? Right. So we had a founder of a bank on the show before, and that was one of the questions just popped into my head. How does somebody go about thinking of starting a bank? At one point in time, Cohesion didn't exist. And now you're okay, not only are we starting this firm, but you've made some decisions of what type of client you're going to serve, what type of business you're going to be in, and so forth. Where was the vision, by the way? What was the vision at the early stages?
I was going to say, I wish I could tell you that I had this vision all the way along, but all as entrepreneurs, we know that what we have, it ebbs and flows of market conditions and customer and client demands and just where things go.
Yeah.
And look, I think first and foremost, we have to acknowledge that I'm an entrepreneur and business owner before I'm an accountant. And so I tend to see things in a lot of parallel and similar ways that my clients do. And so in understanding that, it helps me to develop a firm that I would know that I would want and need if I didn't have the tax, accounting, financial expertise that I do. And so I think that, just to be really honest, I started with the intent of hanging a shingle and having a professional services practice and executing well, making a good living. And then that just evolves and you start to see what the client and the customer needs. And then you start to say, okay, well, at the time, that's a sales opportunity, right? And then you start to see the impact. You're okay, well, this is bigger than that because this is an underserved need that's in the market for people. And now this is a mission to try to push, planning to the forefront and just to do things different. And with that comes challenges in molding new people as you bring them into organizations or, accustomed to doing things the way it's always been done at firms from a compliance-based perspective. And so, again, as fellow entrepreneurs, we all understand that what we see so clearly, not everyone else that we bring into our organization does in trying to communicate and train and impart those things into them to grow at scale. That's a challenge, right?
Yeah. What are some of those traits you look for as Cohesion grows and you're building the team, whether the team's around, the account and bookkeeping side or the wealth management side of your business? Is there some common threads here that you're hey, look, here are some top 3 things that this is what makes Cohesion, right? I mean, culture is everything, right? And I've talked about that before, how it, Trump strategy every day, right? The old saying that it goes. But tell me a little bit about y'all's culture there. How do you make that? What are you looking for as y'all really build this team and put people in the right places?
Yeah, and this may come across offensive to accountants, but I'm just going to go there anyways.
It's okay. My wife's a CPA. I'm sure I've offended her many times with talking about accounting.
One of those things that we look for is, it's one of our core values, is relatability. And that's not something you can find in a really high percentage of accountants. There's some really high performers that come out They usually get snatched up by big firms, end up in an audit practice, interfacing with clients. They get burned out and they leave the industry. And so trying to find someone who can relate to the client and have a conversation with that client that the client's going to want to engage with them in, as opposed to somebody wanting to claw their eyeballs out because they're having to listen to somebody talk about code sections and about what you can't do, right? So I think that that's really the first thing. And I think when you look for that character trait, if you can then find someone who has the ability to be empathetic, which is really hard to understand on the front end, but if you get someone who's empathetic, who really internalizes and feels and understands how their client's thinking and feeling, and that they want to execute because they want that client to have the best experience possible, that's another trait that, really would, allow for someone to succeed here.
Right on.
I love it. And it is so funny that you mentioned that, because that's, we do a lot of work with the wealth management space, right? With lots of firms and financial advisors have that same thing, right? The really successful ones, the best ones, have that excellent bedside manner, right? Great empathy, great ability to relate to people. Yeah. Amazing at breaking things down Barney style, as the saying goes, making it really simple so anybody can understand it, not trying to talk jargon to the client, right? Such an important trait to have for somebody in this space.
Yeah, how do you make somebody feel good about writing a $20 million tax check? That's a skill to me. It's just, and sometimes that's the right answer, right?
Yeah,
sometimes that's the right answer.
Yeah.
Oh, sorry.
No, look, it's just a special kind of a conflation of a number of attributes. I think of a team that has to come together to really work with someone who, has to write a $20 million. That doesn't feel good. Like, they worked hard for it. They have sacrificed a lot to get there. Now they're at this point of sending this money, to the government. And there's a lot of empathy that needs to go with that. Maybe a couple bottles of wine too, but that's hard to do. That's something I think your team has done well with, is being empathetic with their customers that are working hard. But at the end of the day, you got to obey the law. You got to take care of taxes. And you really do lean into your team that you surround yourself with, and that's the big thing for us. It's just that because we have on the corporate side and personal side work with you guys, and really just kind of being surrounded by someone has the answer. It's just a matter of hey, let's put our heads together and figure it out. So yeah, kudos to you guys. I think I like the team you're building.
No, we appreciate it, Todd.
That's fantastic. It's funny, Todd. You kind of almost touched on, without overtly saying it, kind of how we want to wrap this show up, bring it full circle, is that concept of trust, right? Like, as you said, you have somebody else preparing the taxes and helping you do all this complex stuff that, if not done properly, can get a knock on your door in order to appear before a court, right? Sure. So you have to trust the people who are managing this process. And obviously, what Six Lock is doing with money movement, it all comes to trust. So walk through that. Like, how do you think about this concept of making sure you build trust, that you that everything is secure and confident in the process, so that the client can feel good about it, have that great sleep at night factor, and know that they're on track and they're in good hands?
Yeah. I tell my team this all the time, trust takes months and years to build, and it can be lost in a second. And look, as people who are imperfect humans, we all are, mistakes happen. And that's never something you want to have to, deal with, but they do. And so I think also it's when you do have a mistake or a problem that's arisen, you can honestly end up walking away with a lot of trust if it's handled correctly. If it's not handled correct, that can lead to a problem. And look, just like everyone here listening to this call, you've experienced something like that in your business. Like we have too. You can't control everything. All you can do is take one step, put in front of the other, and keep going. But to the point of it's trying to be the best steward of your client's resources as you can, as if they're your own, and reviewing, re-reviewing, and re-reviewing to ensure that best outcome is there. There's no perfect outcome, but there are, more optimal outcomes than the other.
Love it. Yeah. Man, we echo that on our side too, man. Just really building that trust with, our customers at private equity and a venture capital side. We are getting them out of the way of fraud. The fraud vectors are intense these days. And there's it's a massive level of trust that they put into us to say, hey, look, we have the framework to get you out of the way of all of that. The AI enabled fraud now coming at us with like voice cloning and deep fakes and the facial impersonations and all of this is just this completely next level, which is basically negates all of the traditional practices that we've had over time that we used to trust. So that trust is really kind of gone now. The trusting of a phone call, of which is a callback, or trusting of emails. Oh yeah, those are the right routing and account numbers on that PDF. So I trust that. Like all of that just like disappears. So where's the trust now? And that's where 6LOC really enters the picture, is to really kind of come in and say, hey, look, this platform is for you. It is purpose built. This is your trust factor now, is that this system of record of everything is how you move money today and how you do it. And so, yeah, I certainly feel those sentiments that you do too around building long-term relationships, and how that trust works and how you lean into it within the relationships, that they grow over time.
Love it. For sure. And to your point earlier, you mentioned that how hard earned that money is. When people are sending it, they want to feel good and secure about it.
Yeah.
And or, what a great platform to be able to offer that to somebody, and that sleep at night factor.
Yeah. Yeah, no doubt about it. Yeah, we hear that all the time. Like, man, I just click and pray if we do a deal on a Friday, I click and pray, and I don't sleep all weekend, coming in on Monday, and I'm hoping I don't have an email from a customer, LP, investor, whoever saying, hey, where the funds? Yeah. So there's no doubt about it, man. Yeah, you have to step up and serve these folks and give them things they need, which is all fundamentally comes down to trust, no doubt.
Yeah. Jean-Marc, Todd was just talking about protecting against fraud and how sophisticated fraudsters are getting. And it made me think about, like, maybe unintentionally, but you might be one of the frontline guardians about detecting fraud, right? I mean, you're seeing money flow for organizations, and I'm sure it's happened where you spot irregularities and you have to raise the red flag with the client to let them know, like, something's off here. How often does that happen where you're able to, like, let a client know in their business there might be some shenanigans happening that they're unaware of?
I will say, thankfully, not often. Thankfully not often. There are situations. I think that, the most common ones still are, the whole change my direct deposit information for payroll. That's a potential risk for, an LP GP type of scenario as well. And so I think that's a super common one that we see. Usually a lower dollar amount on something like that, but still, erodes trust and scares everybody involved. The other one that's out there that's super common is the whole, spoofing of an email address, and the CEO's asking for $500 iTunes gift cards for some, low-level person to go out and buy them. You still see that stuff happen. Wow. So it's out there, and, no matter how much you tell people, there's somebody with your organization that's going to be more susceptible to it than others. And just, it's out there. So we see it. We don't see it at the volume that you would probably expect, which I'm thankful for.
That's great. Great. Well, this has been a fantastic conversation. People can find you at cohesionco.com is the website. And you're active on LinkedIn. We'll make sure we get both of those linked up in the show notes. This has been awesome. Thank you very much for coming on the show, Jean-Marc.
Really enjoyed it. Todd, Mike, thanks for having me.
Yeah, you're welcome, buddy. And I look forward to someday seeing Bullwinkle up there, have some friends mounted up there. I know you've been to Africa a couple times, so I know that there's some heading your way.
I know you're going to end up with me having hate mail after this podcast for that.
As long as you eat what you catch. That's the way I would say it.
That's how it works.
We grew up fishing and eat what you catch. That's what we do it. So
that's right.
Awesome stuff, gents. Thank you very much.
Thank y'all.
Thanks, guys.
Thank you very much for listening to and or watching this episode of the 6x6 Lock Podcast. It's always fantastic to have you with us. Huge props to John Mark Prewitt and his moves for coming on the show and sharing some great insights on tax planning, QSBS, and what it really means to protect the wealth your firm has built. I hope you got as much out of the show as I did. Awesome episode. Now, as I mentioned at the top of the show, please do make sure you subscribe to the 6x6 Lock Podcast on your favorite podcast platform. And if you have a moment, give it a like and add a comment. We want to make sure this show reaches a larger audience because people in the private markets really need to get this type of insights. I think you'll agree. Okay, that's all I have for you today. Make sure you're being nice to each other. We'll see you next time on the 6x6 Lock Podcast. See ya. Bye.